Yeah, good morning, everyone. So, yesterday we saw some corrections in the US market, mainly driven by the rising bond yield. So, there is a conflict between good results of the company which has been declared and the macro economy which is which has already uh, Fed want it to be lower. So when that get reflected is an important thing. But the tussle between two is putting the market in zigzag manner. So we saw yesterday some corrections in the US market, and even the futures are a bit softer in today's market in today's morning trade. So, but the Asian market are seeing the larger decline. Most of the markets are down by anywhere between 1 to 1.5% in Asia, and that may get reflected into Indian market as well. Even on the commodity side, iron ore and steel both are down by around 2.1% respectively, though oil is up by marginally around 50 $0.5 as compared to the same time last yesterday. So overall seems more of a profit booking day. Uh, I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. Today, looking towards Asian markets, our market is likely to open with a gap down opening, and we are likely to witness a profit booking during a day. From the last four trading session, we have witnessed a very good smart pullback rally from almost 17,000 levels to 17,600. So, the profit booking cannot be denied after such kind of a pullback rally. Yesterday, we have seen that the Nifty was hovering above the 50 DMA, but somehow manages to maintain a closing above the 50 DMA itself. But looking towards the today's trading sessions, I believe that today the market is likely to maintain a closing above the 50 DMA as well. So as of now, the current support is placed at 17,370 levels. If Nifty manages to maintain a closing above that level, then the selling pressure is likely to be intensified, and which might take a Nifty back towards 17,200 to 17,100 levels on the lower side. So for today intraday purpose, 17,420 first support level, below that level 17,370, 17,300 levels are likely to be seen. Whereas on high side, 17,500 will act as an immediate resistance zone provided by its 50 DMA. If it's maintained that level on the closing basis, then only we can again witness some pullback rally into the market. So the view will remain cautious on the Nifty, since profit booking is likely to be seen into the market as such. Coming towards the bank nifty for today intraday purpose, 40,140, 39,800 are the crucial support we need to keep eye on it. Whereas on high side, 40,640, 41,000 are the crucial resistance level on the bank nifty front. Coming towards the nifty finance services, 18,200, 18,320 are the resistance level. On the flip side, 18,000 and 17,940 are the crucial support we need to keep eye on it. But we are continuously emphasizing that it is a stock specific market. One should remain a trade into the stock specific with the quality stocks and maintain with the strict stop losses. I think that's it from my end. I request everybody you guys to take a call forward.
Yeah, thank you. Good morning, everyone. So, as per Director's data front, if you look at the overall OI positions in today, yesterday, second half also, we have seen that the sell-off was witnessed in the second half. While as per the OI positions, we are seeing that from on the monthly basis from 17,500 to 17,800 strike, correlated positions are continuously getting added up. As per in today's session, also we are seeing that some sort of pressure will be witnessed because as per the SGX, we are witnessing that Nifty is likely to open on a down front around 100 to 150 points on the lower end. Currently, we are seeing on the weekly basis between 17,600 to 800 strike, almost around 7 million positions of call writer position got added up. So if Nifty goes above 17,600 level, then only we might expect the Nifty to go on the upper end towards 17,800 level. On the downside, the supportive level for the Nifty in today's trading session would be 17,300 level. Below 17,300 level, there is directly the next support would be at 17,000 level. So the supportive level which was there from previous two trading session around 17,400 and 500 level got shifted on the lower end towards 17,300 level. So currently view might be a bit cautious. So if in today's trading session, once Nifty comes around 17,450, 500 level, you should book your long positions and should wait for new long positions. Once if Nifty goes above 17,600 level, then only new long positions need to be created. And as per stock and sectoral specific, we expect metal and IT sector to show some more negative strength in today's trading session. Currently, for trading perspective, we expect Canfin Home, LTI, and Aarti Industries. These three counter looks negative in today's trading session. Thank you.
Good morning. IndusInd Bank result was marginally above expectation because of better asset quality. Gross NPA declined to 2.1% versus quarter-on-quarter 2.3%. Slippage also came at 2.4% against expectation of close to 3%, and June quarter number was at 3.6%. So a good decline. And even the restructured book came down from 2% to 1.5%. So overall, robust set of numbers, even in terms of growth, loan growth of 18% and stable NIMs. ROA inched up to 1.8% for the quarter. So it has continuously been inching up, and we think this is a sustainable level for the ROA. We expect re-rating to continue, and among large caps, stock is likely to outperform. So we remain positive. AU Small Finance Bank result was in line. Banks focus on high growth and high cost to achieve that growth. Continued net interest income grew for 44% in line with loan growth, and pre-provisioning profit growth was at 27%. Asset quality remains stable. ROA over here is also at 1.8%, and we think stock from here can compound at around 25% going forward. IIFL Wealth Management result was in line with expectation. Core revenue grew by 10% sequentially, but EBITDA was flat. One positive thing going beyond the flattish EBITDA is that the distribution and AMC business, which is the recurring revenue business, that AUM grew by 8.5% sequentially. In comparison, the mutual fund industry broadly grew by around 3.5%. This particular segment has outperformed. So this is long-term positive for IIFL Wealth. Max Financial Services result is above expectation due to better than expected VNB margin. However, if we look at APE, that has declined by 7% year on year compared to flattish performance for the industry. So we are neutral in near term. HDFC Asset Management Company result was in line with expectation. AUM grew by 3.4% sequentially in line with industry, and that is why the market share was constant at 11%. So in a case of HDFC AMC, we are seeing that after continuously losing market share for last 10 quarters, now market share has loss has stopped and it has stabilized. Revenue and EBITDA both grew by 4% sequentially. So we are positive from long-term perspective. Nippon Life Asset Management result was okay. AUM grew by 2%, slightly slower than HDFC AMC's 3.4%. Hence, the company lost some market share of around 10 basis points. And although from long-term perspective, we remain positive on Nippon Life also. Home First Finance, the housing finance NBFC result has improved. AUM growth remained high at 36%. However, OPEX growth grew by 47%, leading to pre-provisioning profit growth of 24%. Credit cost remained low at 0.3%, and asset quality improved across all parameters of gross NPA and days past due. So it's a stable 30% kind of compounding company. So we remain positive over here. Thank you.
Good morning. KPIT Technologies posted its result yesterday, and the company has posted a nice set of numbers for the quarter with CCQOQ revenue growth coming in at 8.3%. Dollar revenue came in at 94 million versus expectation of 93 million. EBITDA margin stepped by 86 bips to QOQ, majorly due to wage hike, and came in at 18.5%. The company had done acquisition of the which is expected to come into revenue from Q3 FY23. For FY23, the company has raised the growth outlook to 31 to 32%. Of this, organic revenue growth guidance has been raised to 23% plus, as against 18 to 21% earlier. EBITDA margin is expected to be in the range of 18.5 to 19%. Some of the one-off expenses due to acquisition is already considered in the guidance. Looking at the good growth outlook is positive on the company. Persistent system posted above expectation numbers both on the revenue and the margin front. Dollar revenue came in at 255 million versus expectation of 252 million. EBITDA margins also improved and came in at 18% versus expectation of 16.9%. Stock is trading at a PE of 26 times FY24 EPS. Acelia Solutions posted improved set of numbers both on the revenue and the margin front. Revenue came in at 115 crore, which is above the pre-COVID level for the quarter. EBITDA margins came in at 44.8% versus QOQ of 40.9%. Stock is trading at a PE of 18.7 times TTM EPS. Thank you.
Good morning. Ultratech Cement reported below expectation numbers. However, it was better as compared to its peers due to better sourcing of fuel. Sales volume came in at 23.1 million ton versus expectation of 22.5 million ton. EBITDA per ton came in at 808 versus expectation of 893. The management has indicated a good demand coming in from the eastern region, and which is likely to see the maximum margin improvement in the next 2 quarters. The company also expects the cost of fuel to come down significantly in the next 2 quarters, hence improving margins overall. Demand is very strong, and the company expects good infra demand coming in from the government with elections coming up. We are long-term positive on the company. Sagar Cement reported below expectation result. Sales volume came in at 1.03 million ton versus expectation of 1 million ton. Realization per ton came in at 4,585 versus expectation of 4,496. EBITDA per ton came in at rupees 55 versus expectation of 234. The company has its con call today, wherein further details are awaited. Thank you.
Yeah, apart from these few results, Havells has reported results, and results is below expectations. We had seen revenue coming lower, revenue coming more of in line with what was expected, but the margin came lower than what was expected. Margin came in at 7.8% versus expectation of 11.1%. So we saw across the board margin decline, specifically in Lloyd. Lloyd had seen sharp decline in margin in this quarter, from -5% in previous quarter to almost -20%. So this was a major decline. Apart from that, even in consumer electronic also saw margin decline of around 200 basis points. And even lighting and fixture also saw quarter-on-quarter decline of around 200 basis points. So these were the major decline which we had seen in the EBIT of the major divisions. No doubt the margins in the near term can remain under pressure, but long term can come back. So near term may see some profit booking or corrections in the stock, but any major decline can be used in the Havells for long term perspective. Apart from that, Sopper stock has declared the results, and results seems more of in line with expectations, wherein revenue came marginally ahead of expectation at around 1,008 crore versus expectation of 976 crore. If we compare it with pre-COVID level, then the revenue is up by around 20% as compared to pre-COVID level. So which is showing good trend. And apart from that, even the EBITDA has also shown improvement. EBITDA margin has also came in line with at around 17%, which was expected, but higher than last year of around 11%. Company has opened two stores in H1, three stores in H1, and further likely to open and on course to open 9 stores, which was the target to open 12 store in the first half. Company has done a lot of renovations of their existing stores, and the outlook of the stores has changed. And also company has focused on beauty, and which is yielding some results for the company, and share of the beauty is increasing in this, and private brand also saw some improvement in this quarter. So the basic pillars are in place and doing well. Though the stock has run up a lot since our recommendations, but still there is a scope for improvement in valuations and growth. We expect that the growth can continue in the coming quarter, as well as third quarter is seasonally very strong quarter for all these retail companies. So that will have a positive impact in the near term also. So overall outlook on Super stock continue to remain positive. Apart from that, TCM Sriram has reported results. The result has shown declining trend. Specifically, their key division, that is chloroalkali, chlorovinyl and sugar, both have reported declining results. Chlorovinyl, that is caustic soda and PVC, has reported a bit decline both quarter on quarter and year on year, and the decline is much sharper as compared to the expectations. And also sugar, they had reported a bit loss of around 35 crores against last year profit of around 14 crores. So that is also showing some declining trend. So other division, which are comparatively smaller, has shown some improvement, like farm solution, bioseed, fertilizer, and etc. But they are comparatively smaller segment for the company as compared to these two bigger segment. So the outlook for the near term may remain under pressure because of this result. So Navin Fluorine has reported results, and the result came lower than expectations. The benefit of the new plant which has started in this quarter is not seen fully in this quarter. As such, revenue came lower at around 420 crore against expectation of 445 crore, and similar thing got reflected even in the margin, which came lower at around 22% as against 25%. So result seems comparatively below expectations. Need to have more clarity from the management about the reason for decline in this below expected expectation of results.
Hello. So thank you, sir. This is Ria for the currency. So on the currency front, we had seen yield shooting up yesterday, and this has triggered the momentum towards the safe havens again. Dollar index has risen to the highs of 113 and is trading above the same. The same effect could be seen into the rupee as well. Yesterday, rupee shot up almost 25 to 30 paise towards 83. And this is indicating that the RBI for now has pulled off his hands in securing the or safeguarding the level of 82, 83. So in today's session, rupee has opened at around 83.08. One must be wary that RBI could come in to again for the intervention and get the rupee at around 82.75, 82.50. Just look for a breakout. The levels that you can follow is the resistance of 83.25 and the support of 82.90. If the pair breaches any of these levels, you can take position accordingly. For the pound, selling pressure could be witnessed in today's sessions. There is the CPI numbers that have come for the UK economy, which has come at a double digit at around 10.1%. And also there is a Bank of England aiding into the borrowing scheme of the government. So some of the pressure could be seen, selling pressure could be seen into the pound. Look for a breakdown of 92.88 for going short into the GBP INR. For JPY INR, the pair is now trading around, at above 149 levels and very near to the 150 levels. This is a very red line that could trigger another intervention by the Bank of Japan. So be very careful by trading into the JPY INR as well. But overall selling pressure again onto the JPY INR. Look for a breakdown of 55.30 for a target of 55, and you can keep a SL at around 55.80. So that's all on the currency front. Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.